All right, so welcome back. So in this video, I'm going to be showing you how you can actually make money even when you lose your Profirm challenge or your Profirm evaluation, right? So we've all seen the stats that says that the pass rate for Profirms is just about 10%, right? So what that means basically is that one out of every 10 challenges that you take is likely going to be what will, get over the line, right? And that doesn't even mean that you are going to make money on that, right? So it's possible to pass and still not make money, right? So the statistics says that just about 30% of those who actually pass make it to their first payout. So that is really, really, um, something to think about. So what that means is that less than 1% of people who are going to be taking Profem challenges uh, are likely going to be making it to payout. Now, so I was thinking that is it not possible for us to, turn this on its head such that at least even if we don't make money, at least let's not lose money. Um, Taking challenges. So the first thing that actually came to my head was hedging across firms, right? So you take a particular you take a challenge on firm A, you run the evaluation on firm B, and then you trade you hedge across the two accounts. Now the danger there is things like the daily drawdown, even though I found a way to go around that. But one, I had issues with finding the right prop firm. Needing so many prop firms to be able to do that effectively. And the fact that many prop firms really frown against that, right? So it's not, it wasn't something that was easy to, that was something that someone could progress on. So I decided to just let's do this with a personal brokerage, and I was able to eventually fine tune the system that works so well. Now, what I'm about to show you, you can set it up different ways you want. We are going to do this with a 10K account. We're going to do this with a 100K account. We'll do everything first in Excel, and then I'll take it to the EA, and then you see how the EA does this thing automatically. And we'll do several simulations, run several back tests, and or what have you, so that you can see the potential that this has. Because basically, what I'm telling you, you are going to be making money even when you lose. In fact, in some cases, you almost want to lose, right, to even lose the profit account, right? So let's get into it. Okay, so the first thing that we need to have is our account capital. So start with a 10K account. And so many of the things I'm going to be talking about is going to be based on the leaders, that is FTMO, the FTMO two-step account. So what I'm discussing has to do with static drawdown, 10% max drawdown, and then the usual two-phase 10%, 5%, right? So I don't want to do this for one phase due to the fact of trailing drawdown. Trailing drawdown is something that I really dislike, and I'm not even going to break my head trying to figure out how to get it to work. On trailing drawdown, almost all the one steps that we have in the industry are trailing drawdown. All right, we all have trailing drawdown. So we'll just stick with our two-phase accounts for now. Maybe sometime in future I'll design one for maybe three-phase accounts, right? But for now, let's stick with our two-phase accounts. So you have the account capital. You put in the account costs. So a 10K account right now on FTMO costs about 110 USD. It's slightly under it, but let's just approximate it to 110. All right, so the max drawdown is 10, the cost allowance. All right, now this is where the issue of cost allowance comes, because what we are going to do is that we are going to place, let's say we place a buy on EU on our Profim account, we are going to place a sell on the same EU on our personal brokerage account. So what is going to happen is that we are going to lose somewhere and win somewhere. That is basically what we are doing. All right. Now, the question is, how do you know um, the lot sizes to use? This is really where the whole difference is made. If you use the wrong lot sizes, this doesn't work, right? So we're going to I've done the whole calculation for you on how you get to this phase one multiplier. Now, however, in doing these things, one thing that I've seen some other people that try to talk about this do, which they get wrong, is that they neglect costs, right? They neglect costs and costs in terms of commissions, in terms of swaps. And if you've traded with Profirms long enough and you pay attention to your costs, one of the things you will see is that swap rates are usually very, very high, right? So when they are charging you swap, it's going to be very high. When they are paying you, it's going to be very, very small compared with typical brokerages. So one of the things I've done with this EA to minimize costs is the fact that we're not going to hold over any day, right? Every trade is closed same day. We'll see that when we get to the EA. So, however, you still run up commission costs. So what we are assuming is that we're going to be devoting 1%, right? We're going to be spending 1% of the account on commissions. And trust me, don't think that's too high. It's not high. In fact, sometimes by the time we go to the test, you see that there's going to be times when you're even going to exceed it. And of course, there are going to be times when it's going to be less, right? So the EA doesn't use the assumption, the EA actually finds, calculates the trading costs that was spent throughout that whole particular phase, right? It's going to get it from the account details. All right, but for now, for the purpose of this Excel sheet, we are just going to assume that we are going to be risking or that we're going to be losing about 1% to commissions, right? Now, this gain on Prop Plus, this is my own personal innovation. I'm not sure you really find this anywhere the way I've done it. So here you're going to specify how much do you want to make when you lose. Yeah, exactly. I'm sure you're wondering how. Yeah. So just follow me. So if you lose, this is how much you want to make. Now, it's not going to be exact. Sometimes you're going to make more than that. Sometimes you're going to make less, dependent on the costs, on how much you eventually spend um, in paying commissions, right? Because remember, you're going to be paying commissions two ways. You're going to be paying commissions on the prop firm, and you're going to be paying commissions on your personal brokerage account. All right. So the next thing is what's the target? Remember, we're in phase one, right? So this is phase one, and so account target is 10.1, right? So the extra 0.1 is to cater for commissions that are charged after we close. If you leave it at 10%, this also applies to even when you're trading normally, right? If you go and target 10% on the dot, what will happen is that by the time the trade is being closed, especially on MT5, the way that commissions are charged is that they are charged both when you open a trade and when you close the trade. So if you're exactly on target and then you close a trade, you are going to drop below the target, right? So you need to overshoot the target so that you are able to pay for the commissions and still stay out, stay over the line, right? Now, once you've done this, the phase one multiplier goes up on your screen, right? You can edit that. That is by design. So I'm going to be talking about this later, but we're going to be doing a webinar later this weekend. And for everyone that joins that webinar, you're going to have access to that registers for that webinar. You're going to have access to this Excel file so you can play around with it. All right. So um, we change this to 30. All right, so you see that your phase one multiplier changes. And once your phase one multiplier changes, it shows you what your brokerage cost is going to be. This is not fixed, right? So what you eventually spend in costs is in paying commissions is eventually going to affect your actual brokerage costs, right? So, but it gives you a close approximation of what it should look like. So one of the things you would see is that if you increase the amount that you're trying to make on each loss, the amount that you need to have in your brokerage or that you're going to lose in your brokerage is going to increase. So you need to weigh that. How much you want to make versus how much you have to put into your personal brokerage, right? Into your personal account on a brokerage account. All right, so but let's leave it at 40 for now. I think it's um something in the middle. All right, so what that means is that assuming we hit our target, this is what it will be, right? This is what we would have achieved, which is 10.1%. Now, within this 10.1%, it's $100. Remember these commissions. For us to reach this amount, we had paid this in commissions. So the actual amount that we would have reached if we weren't paying commissions would have been 1,110, right? So by the time we move this thing to the brokerage, basically what we have is that on the brokerage side, we are going to lose this, right? So a total of 185, which is what you have here. So that is if you pass phase one. On the other hand, if you fail phase one, right? So basically, what we are going to do using this same multiplier, if we fail phase one, then we'll lose 1K on the prop firm side, right? Basically 10%, which includes this 100 commission. So by the time you are reaching 900, we assuming would have lost this account. Basically, on our brokerage, we'll make this minus the commissions that we would have paid, right? Which is basically this multiplier times this, right? Minus that commission, and we have 150. All right, so if we fail this challenge, we'll make 150 on as profit on our personal brokerage account, right? Now remember you paid 110 for this, so 150 minus 110 will give you the gain on prop loss, $40. So this basically just spells it out. So if you pass scenario one, the account cost is 110, you lose this on your brokerage, and then the total phase one costs will be the account costs to get the prop firm account plus the amount you lose on your brokerage, which will be 295. All right. So if you pass phase one, right, you will be down $295, right, based on this scenario. Now, if you fail phase one, then you would have gained 150 on your brokerage account, and then you would have lost this amount that you used to buy the prop firm, and your net gain will be 40, right? So you see that making money when we lose. Okay, let's assume we pass and we move on to phase two. So in phase two, our account capital stays the same. Our phase one costs, you can change this. That is basically how much it cost us from phase one. So that's just transferred in here. Phase one cost, max drawdown stays the same. Cost allowance, we're still making the same room, 1%. Right. Most times in phase two, you're not going to get up to that, but occasionally, you are going to hit that. So you want to be prepared for that. So again on prop loss, again, if we lose phase two, we want to make $40. So we're not going to be changing this gain on prop loss until we are done with a full cycle. And a full cycle ends when we lose the account. Yes, that is when a full cycle happens. So remember what we are doing, we are flipping the script, right? We are flipping the script. We are making money when we lose. All right. So account target 5.1, right, is phase two. So 5% target plus the 0.1% extra for commissions and spreads. All right. So once we've put in all those values, it gives us our phase two multiplier. So when you're using a copier, right, for those of us who have used trade copiers, so you have the option of putting the multiplier. So that will mean what percentage of the lot size you're using on the prop firm account should be replicated on your brokerage account. So that's basically what that multiplier is. So it tells us what our brokerage cost is likely going to be, right? So again, we can just play that out because of, let's not make this video too long. It's going to be long, but let's not make it too long. So phase one costs, if we pass phase two, so remember our phase one costs, which is 295, it's here. Now we would have lost this amount again on our personal brokerage account, right? Because we are still hedging it. And the total costs to pass this phase one and phase two will be 522. Okay, right. So that looks, normally you just look at that and it looks like it's on the high side. But two things. One, remember the only time that you are going to have this amount is you have a funded account. So does it make sense to pay 522 to get a guaranteed 10K funded account? That question is yours to answer, right? Okay. Now let's assume we fail. All right, so that's scenario two. We fail phase two. So we would have made this on our personal brokerage. Can look at this to see the breakdown of that. Would have made this on our personal brokerage, then minus the phase one costs. Remember, the phase one cost is made up of the amount we lost in our personal brokerage in phase one, and then the cost of getting the Profem account, right? That is what makes up this phase one cost. So when we subtract it, we get our net gain. Again, is that gain on Plus, right? So make this money. So even if we lose the account, we pass phase one, lose phase two, we get to make this amount whenever we lose the account, right? So at this stage, you can decide to stop, right? So you could use this particular system to simply um, ensure um, that your downside is limited in the sense that it's almost like paying for an instant funded account without all the headaches of, most of the instant funding accounts that we have today. So if you look at most of the instant funding account, their rules are usually very, very ridiculous, right? And the ones that are not ridiculous, the prices are way, way higher than this. So to get a 10K instant funded account, you definitely cannot be paying 522. And if you are paying 522, bet you the rules are going to be really, really strict. Nothing compared with the normal um, two-step evaluation that you have on most firms. All right. So the first way to use the system is simply to use it to get as many funded accounts as you want, right? And limiting every single time you fail. Remember what we are looking at. You are going to fail more times than you pass, right? So you are going to be failing more times than you pass. By the time we get into um, the EA, you actually see that this cost is actually going to go down because since you are failing more times, the amount you are making from all these times that you fail is going to help to reduce this particular amount that you are actually going to be that's going to be leaving your pockets when you actually pass the account, right? Now, one of the things you could do, of course, you could just use this pass because this system is designed to pass quickly. In fact, by the time we go through the EA, you will see that if you have the resources in terms of money and time, you can do almost 40 evaluations in 1 year using this particular system. So it's designed for you to go through those evaluations really, really fast, right? So you're you're passing, you're going why? Because you're not afraid of losing. So the reason why we're usually, we are so risk managed and we are doing it because we don't want to lose the account. Then what if you're not afraid of losing? Imagine what that opens to you, right? So the first thing you can do, use it, pass as many accounts as possible, move it to the FX Legend EA, right? So the FX Legend EA would be doing between um, about 3%, right? If it's doing about 3% every month. Now imagine that in a year you pass, let's just use a little figure. Let's say you pass five accounts. You now have 500 accounts in a year, and you are using it to trade, right? And you're making 3% every month. 3% every month times five accounts times 12. Just do that, just do those numbers in your head, and you will see where this is going, right? Now, the second way you can do this is now, if you go that first method, you need to be profitable. I'm just using the FX Legend EA as an example. If you don't want to use the EA, of course, you can trade by yourself if you have a profitable edge in the market and you are sure about that, right? You have to really be sure about that, right? So, but one thing you could do is to simply carry this system into the funded stage. And that's what we're going to do next. So in the funded stage, our account capital remains the same. Phase two costs now becomes the entire cost of passing the evaluation, right? Which is the cost of the prop firm, the amount lost in phase one, the amount lost in phase two, right? So our profit split is 80%, max drawdown, cost allowance remains 1%, gain on prop loss remains 40. So again, what that means is if we lose at this funded stage, you're going to be making $40. All right, so the account targets. All right, so this one is up to us to set. All right, so it's down to 4.1 at the moment. Right, you can set it to whatever you want. So, but it's 4.1% at the moment. Let's just work with that. So we can see our phase two multiplier is 0.625. The brokerage cost is 318. So basically, what this tells you is how much um, you need to be ready to kind of lose or kind of leave your pockets for this system to run if you're going to be doing this funded stage, right? It's going to be a total of this plus this. So if we look at that, that is about 840. What I encourage you to do is to carry that on to like 1,000. Right. Just approximate that to 1,000. That is what you need to run this entire system from start to finish. So 110 in your um 110 in your to get the account and about 890 thereabouts in your brokerage account. All right. Okay, so let's assume that we hit our profit target. Our prop earnings will be 328. The brokerage loss will be 318, and then our net gain will be just 9.5. Yeah. So why? Because this system is designed to pay you when you lose. That's when you might be likely making the most money. But there is one part that we are that is not captured in this, and that is the fact of refunds. So that is what can make your prop earnings to actually go up. So you are going to get refunded the amount that you paid for this EA, but I just didn't want to include that in here. All right, for subsequent stages. All right, so oh sorry, this thing is still showing fail phase two. It should be fail funded. Fail funded. All right, so you fail the funded. This is what you gain in your brokerage, right? In terms of profits minus the phase two costs, right? And your net gain is 40. So I'm sure you're now wondering, should we now be losing evaluations? Remember what we are targeting. We are going to lose more times than we win. So if we're going to lose more times than we win, where should we optimize for? We should optimize for the times we lose. All right, so let's get into the E itself. All right, so let's quickly run through the settings. So the first thing is that you have your target hour and target minute. So usually this is the time when the E is going to place a trade. It's going to evaluate whether I should buy in or sell in and then place a trade at that time. What I would say is usually that time can be any time between I would have said 1 a.m., but sometimes a lot of brokers their spreads are still high at 1 a.m. Even though it starts coming down very soon after. So let's just say from 1:30 to like 3 a.m. You want it to be very early in the day so that it can capture the bulk of the day's move. Now, some people try to use this kind of system and they are scalping the amount you are going to spend on commissions when you're doing that, man, it's going to be much. So it's usually better to um, allow price movement do the heavy lifting for you rather than trying to use your lot sizes to do the heavy lifting. That's my personal recommendation. Um, then we don't keep trades over. So we close every trade at this time, 2350, seek frequency, reference time frame, basically around what times we're going to be using to execute. All right, the symbol to be traded is Euro USD. You can use actually, you can use any currency. The reason why I will say what I will say, which is to use the majors, that is the dollar pairs, Euro USD, USD, AUD USD, to a lesser extent USD JPY because USD and JPY are strongly correlated due to their safe haven um, feature. But you can still use it; it will still be profitable. Um, you can use any of the majors, and that is because of spread, right? Because of spread. So they have the lowest spread, so you'll be paying less in terms of costs that you would have to cough out, right? So trading mode, if you are going to be doing this in a strategy tester, you put this to test. If it's in live, you Profirm account, you put this on live. I'm going to leave it as test for now. Trading method, counter trend, and trend. So I've just discovered testing this that it seems that counter trend works better than trend. It was basically because of the system that is behind it, the way it gets its bias. All right, so current phase, uh, we assume we're starting at phase one. Trade the funded stage. Let's set that to false for now and come back to true. Accounts capital 10K, accounts costs 110. Again on prop loss 50. All right. Then ATR period, we're going to be using this to calculate our stop loss. ATR period 14. And then TP multiple, this is basically the RR. All right. So we'll leave it at 2. All right. So 2R for now. Phase 1 settings. We're going to be using max drawdown, 10%. Risk in percentage. So this is how much we're going to be risking per trade. We take only one trade per day. We're trading only one CBOR, Euro USD, and we're taking just one trade per day. All right. And we're going to be risking 3.5%. For most firms, during the evaluation phases, they don't really care about what you're doing. It's more during the live phase that they are so interested in that. But still, I encourage you not to go near the daily drawdown. So since the daily drawdown is 5%, we're going to stick within 3.5%. Phase one target 10.1, phase one cost, just like we did. We're assuming it's going to be 1.0 so that we get our multiplier. The eventual cost we are going to be paying, we are going to see by the time we begin to run the year. Phase two settings 10. risk 3.5, phase 2 target 5.1. That so this is mainly for the live when we're going to be using this in live environment. You need to put this one manually, the amount lost in phase 1, right? So you need, because the two accounts are not going to be on the same um let's say account. So your brokerage account is going to be separate. So you need to know the amount you lost there and come put it in here. That is the amount I lost in phase 1. Then for the funded phase, we're going to be reducing our risk to 1.5%. You don't want to do anything that will get any profile um, on your keys, right? So that's that. Funded target, we'll leave this as 3.1. Right. So this is where when we come for the webinar, I'm going to be giving some explanations as to how you should determine what risk settings to use, what target to use, the things you should be considering. I'm going to be handling that in the webinar. All right. So funded cost allowance, amount lost in phase 2. Again, you have to put this in yourself. Now, but for the purpose, when we are doing backtest like this, the E is going to get it, right? It's going to calculate what it should be and use that automatically. So include refund on first withdrawal, true, even though we are not going to be trading this funded fees for now. So let's just leave it. All right, so that's that about that. So let's go to settings. Let's turn on visual mode so that we'll see how this actually works. So we start. Right, so we've taken our first trade and it was a buy, and I guess we lost the trade. Yeah, we lost the trade. So moving on to the next day. Okay, another buy trade. Let's see. Another loss. Right, so another loss. You can see our balance is going way down. So as assume another loss would take us to failure on phase 1. Okay, so the trade here is a sell. Let's see. Okay. Oh, let's see what happened. Okay, it was a sell and it actually went up. I'm sorry, I don't know what I was thinking. Okay, so we lost that, and then so it tells us phase 1 failed. You can also see that written on top here. So when you are backtesting, you can just be looking out for that. So phase 1 failed, right? So the total prop cost for this phase is minus 25. That's what I was telling you. That there are going to be times now because we passed very quickly. It just took us 3 trades. We lost all 3. And so sometimes you're going to be having 15 trades, 20 trades before you actually get across, right? If the market is really ranging, right? So that is something that will usually happen. But what happens is that they kind of make up for each other over time. All right. So based on this, is going to use all these formulas that we calculated here, the same way we did this here, that we used the costs to calculate the costs here, use our multiplier to calculate the equivalent cost on the brokerage, use the multiplier to calculate the gain on the brokerage. That's exactly. Oof, okay, so just discovered that I'd been talking without sharing the screen properly. Okay, so let's go back and do this all over again. I just start and go. Sorry about that. So we lose our first trade. We're about to lose the second. And then we lose the third. All right, so this is what I was showing. So if you come here, you see phase one failed, right? So basically what it does is that at the end of every phase is going to reset the account, right? So it has reset the account, deposits that back. So mimicking what you're going to have if you are resetting an account normally. All right, so phase one failed. Total prop cost for this phase is minus 25. The estimated brokerage earnings will be this. And so the estimated net earnings will be 64, right? So that is basically calculated by subtracting subtracting the cost of the account, which is 110 from this estimated brokerage earnings, and you get 64.49. So you see, even though we said that um, we wanted to be making $50 on prop loss, due to the fact that our cost was lower, this actually increased. So let's continue. So didn't hit TP or SL and then got closed at the end of the day. Right. So we don't hold trades over. Right. So lost that one again. So we buy, let's see, closed again. So now our commissions will start racking up. It's taking us quite a while. Okay, so we are close to failing under phase one. Right. There we go. We failed the phase one again. You will see that our costs will be higher now. Right. So total prop costs for this phase is minus 88. So still under the 100 that we budgeted. So our estimated net earnings is going to be higher than what we also wanted. Why? Because the prop cost was lower. Right. So we can do this all day. But just because of our time, I'm going to close this and then run it without visual mode. So let's see the results. And it's in there. Okay, so we have what we want. So you can see the final balance. The account is, if there's something like overread, right? It's minus, like seriously minus. I'm sure you've not seen something like this before. So if you are using percentage, it's not possible for something like this to happen, but the way we are trading, it's possible for it to happen. All right, so total funded accounts, it would have taken 42 evaluations. So total evals taken 42. Um, we are not trading the funded stage, so we can have prop ends. Right. So total fail earnings. So the cumulative amount you would have made from failing accounts is 1,986. So just imagine that 190, 1,986 you have made simply by doing what every trader is afraid to do, which is to do what? Fail, right? So, will I say embrace failure? All right, let's continue. So, total cost for the period. So, this is the amount that you would have spent on getting the accounts, on times that you, the times that you actually, the cost that were spent all over the period. So, this is what it is. So the net cost per account, that's per funded account, is 248. That's what I was trying to explain to you, that even though um phase two cost was giving us 522, in real sense of it is going to be much lower than that, right? So it's 248, and this is simply gotten by subtracting this. So the total cost for this period, you remove how much you actually made, right? So this left your pocket, this entered your pocket. By the time you subtract it, that gives you your net expense, and then divided by it to give you the net cost per account. I should have added a line here showing that subtraction between this guy and this guy. Maybe I'll do that in future. So net cost per account is this, right? So let's change a few things. Let's change our RR from 2 to say 3. And let's see, and then we'll change it to GU, and then I'll begin to wrap this up so that it doesn't get too long. All right, so in this case, we would have taken 42 evals, we'll have 11 funded accounts. That's looking much better. 11 funded accounts. Net cost per account is this. It's higher because we have more funded accounts, right? So less losses. So the less the number of losses you have compared to the overall um vows you've taken, the higher this net cost is going to be. So it's up to you. Do you want to reduce your net cost? In fact, there's no way to know. You can't really control that. Basically your net cost goes down as your failure rates increases. Yeah. So kind of balances itself out, right? So that's good. All right, so let's do GU. Let's change this to GBP USD and just run the same thing on it. So failures, 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 failures. Oh, we had a lot of passes as well. Yeah, sorry, we had a lot of passes as well. So we would have taken 45 evals. Total funded accounts is 18. Total cost for a period, 8K, in fact, almost 9K, right? So, of course, this is up to you. Nothing says you must take all that. I'm just saying this is what could have happened in a year if you really had the funds to um, push through with it. Right. Right. Let me change one other thing and then we can move on. So I've used the 10K account, but Um, nothing says you can only use a 10K account. You can change this to 100K, and on FTMO, this is 600. And then I can decide that every time um, around 300. Let's use 250. Right, it's a bigger account, so getting something more. Right, and let's run this. So this is how some of the guys you see that get all these outstanding payouts, um or they tell you they're trading 5 million in capital and all that. And then but when you listen to this some of their stories, for instance, there was a guy that said he got 1 million payouts and his net spend for the year was about 400K in prop firm evaluations. Right. So but with this you're able to get 1800K accounts with 48K. Right. So it's up to you if you can do that. So the next, of course, you would have made 16K plus on the failures. So forget this figure, what you actually spending. Remember, these are over 46 evals. What you are actually generally spending on average on each account is going to be about 2K. So this is 1757. Right, that is the cost of each account. 1757. So that is what it's going to cost you to get access to 100K. Will I spend this to get access to 100K guaranteed? Definitely. This is something I wouldn't mind spending to get access to 100K. Why? Very simple. All I need to do is just to do about 3% on the account, and I've more than covered this cost. That is assuming that this is where I want to end. But let's do one more thing. Let's assume let's assume I now want to trade the funded phase because of our time. Let me not just be changing. Let me just change this and move. And then and the funded phase. Okay, that's basically that. And then start. So it gives us the rough estimate of this. So of course, because we are now trading the funded stage as well, um, the the total payouts, the total payouts received is 64,807. Right. Your total fail earnings, so the amount you made from failing challenges, 13K, and the total prop earnings is about 38,868. This is all looking good, right? So leave this payout. This total payout received is not really so important. This is what is important when it comes to the prop aspects. 38,868. So 38,668 plus 13, you're looking at about 51K. However, let me take you back here so that you understand what it will cost to actually power that before you start salivating too much. Right. All right. All right. So your multiplier is going to be this, and your brokerage costs will be this. You'll be wondering, why is my brokerage cost reducing? It's simply because the account is cheaper relative to. So when you get a 10K account, you spend 110. To get 10, to get a 100K account from 10K accounts, you're going to be spending 110 times 10, right? Which is going to be 1,100 compared to this account cost, which is 600. This is why this is uh, the way it is, right? So your brokerage requirements are going to be lower, right? So this is basically how it pans out. So we needed to change this. So in this case, this will be, oh, sorry. Sorry, just noticed there was an error with the formula there. So yeah, your multiplier reduces, but your overall cost should still be that. All right, so now that that is corrected, right, and then this will be, just add a zero to it. Again, we'll add a zero to that. Right, so you can see how that will play out. So basically, what I wanted to point you to is that by the time you are getting to your funded, your phase two costs, right? What it takes to get that account or to pass the Profem account is 2935 plus the brokerage cost for hedging the funded is going to be around 180. So basically, you're looking at least close to about 5K, right? So actually, we're needing close to about 6K to be able to power this through to get this type of result. What I think is a fairly decent result, right? To spend 6K, right? To invest 6K and then be getting 50K from it, right? It's a, it's a major one, right? So that's basically the power of what this can do for you. So who is this for? So that why, as I begin to wrap this up. So this is for people who want to scale very quickly, right? So this enables you to scale very quickly, whether you want to get, especially if you're trying to just get funded accounts, right? You want to be max allocated on certain firms. This allows you to scale very quickly while protecting your downside, right? The second kind of people this is for people who want to create an almost sure stream of income for themselves where you are almost guaranteed. So usually I'll say at least close about 70 to 80% on average per annum. Um, using so by the time you test, it's not, especially if you're not using a high account. Many people as I expect to be starting with a 10K account. So um the cost is much higher in terms of the per unit cost compared to 600K for 100K and 1,100 for 10K times 10, right? So it's almost double in terms of the cost per account. So your cost per account increases with those smaller size, but even with that, you're able to generate a steady stream of income on your capital every year, right? For those who want to just use it to pass accounts and then move over to the FX Legend where the real business of making money is, that is still possible, right? So how do you get this E? So the first thing is if you want to just get a 1 month trial, right, so that you can, play around with it, do all these things that I've done, you can head over to Trade Experts and get that. I wanted to make it for free, but I decided against it. But it's available for a ridiculous amount of money, right? You just find out there. So it's the reason why I just did it that way is at least so that I have a bit of skin in the game. It's not just going to be free for all. And then there are only 20 slots available for that. Then, if you feel okay, I think I've seen enough. I want to get this system right. I'll help you with setting it up and all that. You need a VPS for this. You can't do this without a VPS. You need a VPS. Uh, and if you need help setting it up, I'll be happy to sit down with you as I've been doing with all the guys with the FX Legend. Sit down with you and get it all properly set up. And because I really want, with all the years I've been doing recently, I've actually wanted testimonials coming in and then before doing anything when it comes to price. So again, I'm going to be doing something that even myself, I looked at it and said, well, that's just what is in my mind to do. So I'm just going to still go ahead and do it. And that is, it's going to be going for just $100 between now and May 8th. So between now and May 8th, it's just going to be going for $100, a full 1 year license, just $100. And again, once the 20 slots are complete, that will be that for that until if I feel there's a need to expand the slots, but that's not going to be happening anytime soon. All right, so um, like I mentioned earlier, we'll be having a Zoom session so that you can have the opportunity to come ask your questions if you have any issue. I'm going to be putting a link in the description. So there are going to be a couple of links there. One, there's going to be a link to the site if you want to get the EA. You'll find both the 1 year license and the 6 months license there. Uh, there's also going to be a link to register for the webinar that is going to be coming up on the 2nd of May 2026. Right. So we're going to be having a webinar where you could come, ask all your questions, get enlightened, and all that. Right. For everyone who is interested. And like I mentioned, for everyone who registers for that webinar, you are going to be getting the Excel sheet that I used in doing this. And of course, if you get the EA, you also get this Excel sheet as well. So for those who have bought the FX Legend or who will be buying the FX Legend, the 1 month trial is free for you, right? So for everyone who has gotten the FX Legend or who gets the FX Legend, you get a 1 month trial um of the prop gamer. That's what I'm calling the EA of the prop gamer between now and the ending of June. So between now and the end of June, everyone who gets the FX Legend also gets 1 month trial of the prop gamer. Just message me so that you can have access to that. Also starting a loyalty program for everyone who has been buying stuff from Trade Experts. So for everyone who has bought anything from Trade Experts, for every $100 spent, you are entitled to a what's it called? You're entitled to $10 in spendable credits, right? $10 in spendable credits. That's you can use that to actually purchase things from the store, right? So if you go to the Trade Experts website, for every $100 you spent, you actually get $10 to actually use to spend or to buy anything that you want. So, for everyone that has bought anything from the beginning of this year, so that's 2026 onwards, you have that available to you as well. All right, that will be all for now. If you have any questions, drop it in the comment section and I'll be glad to get back to you.